Okay, good morning, traders. Hope we're well. Now, firstly, sorry about the issues yesterday. For anyone that was live and watching, don't ask me why, but I had my headset. I just could not get going. And for whatever reason, the first time in about 3 months, it just decided to connect to a laptop. Now, that laptop I have running every day, and it never connected before. So for some reason, the laptop picked it up through the Bluetooth, and I was talking in there, didn't know anything about it. G'day, Jason. So of course I was running around checking the settings. It was all fine, and then of course my sometime during it, I think I'd mucked around the computer too much, and it just crashed and burned. So it's that blue screen that you see. So hopefully it's not done any damage, but all's well that ends well. So it's all solved, and we're up and running today. We'll rip into it then. So last night, US actually gapped up because of the European session. The European session was doing quite well. They had some good news out, some good data. I know off to the races early. They rallied up from the open. I think they had UK had unemployment rate held, although the jobless claims ticked up again. So it's not as bad as it has been, but unemployment benefits or whatever the claims has slightly gone higher than expected. So it's a bit of a mixed bag. But either way, I think every time something like that happens, everyone's looking towards stimulus and looking to buy shares. So the European market opened strong at 5. Ticked off some bulls, rallied, and then the US opened, quite strong. I think the Dow was up 300 points or so, 350 on the open, and then got smashed on the close to end down. So took a bit of a beating, I think, and the S&P did as well. It looks like the S&P was dragged lower by, g'day Bobby, dragged lower by the tech shares, the heavy tech shares, the big hitters. So they took a bit of a knock as well. Nasdaq headed south, so a bit of weight on the market, I think. Excuse me. A lot of people are looking at Trump. What he signed over on the weekend has been a drop in the ocean type of thing for stimulus. I think the payroll taxes are going to be paid back. Uh, 400-point moves in our market. It's not the move you need; it's the swings you need, the big swings, so you can actually jump on board. The better the volatility, Jason, then it sort of makes those entries. You can give it a bit of room to move, and when it starts moving, you just jump in, knowing that there's a good chance it's going to keep moving, as long as you've got a good stop on there. But yeah, if we get some of that, that'd be nice. I think like I'm expecting that bit of a sell-off. I think that's going to come. I mean, everyone's extended at the moment, and that sell-off last night was a bit of a heads up. And gold, look at the way gold got smacked. Now you jump on Twitter, and all the gold bulls are saying, "Oh, it's just a healthy correction." But the problem is, if you're long anywhere above $100 from here, you're either underwater or you're out. So I think this kind of move, it creates a bit of panic and fear. It's got nothing to do. People look at fundamentals. They're always trying to support with fundamentals, but when a market goes so hard like that, that's not fundamentals driving that market higher. It's pure, to an extent it is, but the higher it goes, it's based on psychology. It's based on FOMO, and that FOMO is easy to turn. And when it turns, um, it doesn't matter whether it should be higher or not. When it turns, it can get smashed like we saw. And that's the one reason we saw that big sell-off in March. Everyone's sort of waiting for the pullback. Once they start realizing it gets underway, because every other time it's pulled back, it's gone up. It's pulled back, it's gone up. So people are holding. They start to realize that no, this is not the pullback time, and then everyone starts bailing. You don't get those strong, powerful moves like spikes up and down because of fundamentals. It's purely based on psychology and people who are long watching it pull back, expecting it, and once you start getting a move down 20, down 30, down $40 on gold, they're going to bail. Who cares if it should be up at $3,000? Now, you do not want to give up your gains. So it'll be interesting to see whether, especially on gold, we'll look at that in a minute, whether it can start finding some buyers at current levels. If it doesn't find any interest there, expect more selling. There's a lot of people stacked up long that could get squeezed out, especially coming in the Asian session and European session. I think it kicked off early, about now. It was already underway, the sell-off, so, and it just built ahead of steam. So you can just see if it was not starting to bounce, people were starting to get nervous, and that really started to tick off on the downside. So I'm thinking with the sell-off and the close in the US, I think some of that negativity could flow over. They still haven't come to any terms of agreement on stimulus in the US, and it seems like Trump doesn't want it. With his kind of package, I think he's intent on not giving out too much, because he feels that you give them too much, they're just going to sit around not working again, and we can't get back to full employment. We can't take steps to get back to full employment because everyone's getting the same or slightly less money by doing nothing. I mean, who's not going to say yes to that? Go back to work and get less money or slightly more, 8 or 9 hours a day, or do nothing for 8 or 9 hours a day and get paid for it. I know what I'd be choosing anyway. I wouldn't really, I'm not that kind of guy, but you know what I mean? So that's why I think his package it's already showing that he's not too intent on paying out too much more money. Maybe it was a bit of a publicity stunt saying, I'm doing the right thing. I'm going around Congress. He's trying to, vote grabbing, saying, I'm doing the right thing. I don't want none of this, what do you call it? Political rubbish, argy-bargy. I'm going to support the workers. But when you drill down on it, what is it? 100 to 400 billion it could be worth when they're talking about $1 trillion package. So it's next to nothing compared to what they're trying to get through. So we'll see if that kicks off. I mean, if it does get some sort of agreement on it, then yeah, they probably get the support onto the markets, and that's probably what's holding the markets still, because they haven't decided yes or no on a package. So I wouldn't expect the markets to get hit hard, because if they do get hit hard and they come through another $1 trillion package, you know what's going to happen. It's just going to burn straight back up again. So look at the Hang Seng. We'll go through the intraday indices. Good sell-off. That was a US sell-off, so it bounced up on the open. Be interesting to see if it can't hold here. We get some more weakness. Expect something more like this, some lower highs to press down through 22,630, but we'll see. It's probably going to take a bit of time. Wait till the Hang Seng opens at 11:15, and then they might get a clearer direction. We'll go to the SPY now. 3 minutes from open. The SPY is one of those funny things. It probably could gap down or could gap up. I mean, who knows with the SPY? It's a bit of a jackrabbit. If it gaps up, I'm expecting that's just a flush of any more sellers can get offside and have to buy back. They can start selling from a higher price, if that makes sense. So it can sort of get gapped up, put the squeeze on, and then start to fail. And that's what you're sort of looking for, that flush. Where's the initial flush? And is that going to look like it's going to stick? And that's a heads up with higher prices, or is it just a flush and then straight back into it on the downside? Otherwise, this is the key level. You can see it's got sold pretty heavily on the US close, straight to that level, bounced off into the close, and then sort of sticking around that, was it 6,100 close. So whether it flushes a few more sellers out, because that has triggered a bit of selling pressure, and it's mainly that level around 6,108, but it can flush through that and you get a lower high to sell into, and see if you can get a run on down through 60.84 of that negativity from the US close. As people start to look at that, we start to look at gold, the US dollar's rallying, putting pressure on commodities, all these sorts of things are going to weigh on our market. Won't write that down. Dow, well, I don't expect too much. It always seems to be getting supported into European session. They don't want to go anywhere fast coming into the US Open. So if that's the case, I mean, you can see longer term, that's the uptrend, potentially broken is what we're seeing. So whether we get another bit of a run high, dragging a few bulls, and then get smashed on the European Open, because you would expect Europe, DAX been up 300 points, 260 points or so, and UK finished high. They saw none of that sell-off. The indices, the futures did, but the indices saw none of that sell-off. So you can probably expect that there's going to be a bit of weakness in the European Open, maybe a bit of fear-driven sell-off, which would mean the Dow could grind up and then start to roll. But we'd be watching for that. And the Hang Seng, the old favourite, it did. Now, where were we yesterday? I think it was here. Oh, this might have been the open, but there's a level. I think it's pushing through this high, 24.5 something, 570 thereabouts. So it's this high just in here. That's what I was looking for breakthrough there, and it's stuck. And you can see this good move up at 11:15 open, big pop up. If you look at the 5-minute chart, there was one red candle. And if you drop that down to a minute, it'd look really nice. So if you're looking, I mean, that's the kind of speed you're trading on the Hang Seng. You're looking for that extension. If it starts to look like it's going to stick, they'll have a second leg. 9 times out of 10, they have a second leg in that direction. And if there's next to no pullback, expect that second leg to be pretty good, which it was. And it played out, and we got that bounce, and then it stuck around, did nothing into that 2 o'clock close. But it was a good move up. You had basically one opportunity, which I didn't get onto. I just alerted to that. That could be the potential. Watch that 5-minute chart on the open through that level. And if they go through the level, it's quick to come back down again if it doesn't want to stay there. Right, so you got to look at these levels. You got to know where they are, and just see the price action on the open. What happens if it starts to go up there? And you're seeing two things. You're seeing buyers that are waiting to see what happens next, and then no sellers. Then it sort of hovers for a bit, and then you'll get the move start to kick off. And once it does, everyone jumps on board. So the Hang Seng, we're just looking for really, want to see if this level can hold 24,746. If it can hold, we might get a work up to 24,996. But if it starts to fall apart, we might get a spike up just to clean out some of these shorts. And if it starts to hold at a higher level up here, just seeing where that close was. That close was somewhere, it was about, so we're at roughly where the market closed at 5 o'clock in the morning. So we spike up, clean out a few of these shorts, we might build for a move lower. And if that gets underway and it goes through this 24,746, it could easily go down to, extend that move down. Hang Seng's just a rocket. It's great. It could extend through down 24,488. It could go straight through that if it really gets ahead of steam. But I would expect that's probably going to be the level of target on the short side if that's what's going to play out. Let's go across to where am I? Let's go across to here. So that's copper. Might as well talk about copper while it's there. It's holding this inside level. Was sold down, which happens with with a bit of a sell-off into equity markets. US dollar is a good one. Now that positive European session, as soon as the US opened, bang, straight back up. Whether that was because of the PPI number, weaker than expected PPI number, producer price index in the US at 1030, which triggered a bit of buying back into the US dollar because they're looking at, no, sorry, it wasn't weaker than expected, stronger than expected, meaning no stimulus, meaning any shorts on the back of stimulus have to close. So that's what I'm thinking. That pop up in the US dollar is from. Yeah, it sort of triggered that, and it's a bit of a squeeze of all these shorts building up too. So longer term, that doesn't look too crash hot for the anyone that's been selling it down here. We still, it's still trending down. I'm sort of looking at this line that could easily squeeze up, take out a few of the shorts, and then roll longer term. So it has a bit more of a contractive action, a bit of more of a macro pullback, you could say, pull back here and then resume that short. It's got to do with that stimulus. If they start pushing through another $1 trillion, expect the US dollar to get belted again, and that's where you're going to get support into gold. Copper, oil took a bit of a, as soon as that US dollar turned, straight, so linked to that US dollar, not so much demand, supply, all that sort of stuff. It's more just the US dollar and the positivity into the markets. US yen, please, might have a look at that. Go to gold. Look at that, absolute beating. So that was about, where was it? 9 o'clock in the morning. So about here is when I was trying to do that stream. This little lower high, we're talking to that. This needed to hold up, didn't. So about here would have been, in this zone here would have been a prime selling opportunity. You can see it broke through this lows, starting to stick, holding lower levels into here, and you could have gone short in there. I just didn't notice it was about the time I was talking. I know it was about the time I was talking, just after it. So yeah, it started to break down and really didn't look back. And you would have, that there's going to be, you've got this key lower high. So you've got one, that secondary move down is well and truly extended. So there's going to be a lot of bulls talking it up, but they're also praying that it goes up. And if you're loaded in the gold stocks and after the last 2 days you didn't get out in the Aussie market, and then you wake up and gold's down $100, you are going to be nervous because you know that there's going to be a bit of a beating on the open into gold shares. So, and if they keep the pressure on, now that Asia's open and woke up and saw this drop, if you're long anywhere above this level, how many people are going to be feeling the pain if they are not out, if they haven't got stopped out, if they don't run hard stops, which a lot of people don't, unfortunately, but they don't. If you got anyone above this level, is going to be feeling the pinch, and it won't take much for them to bail. And this, I'm not saying it's going to be a heavy sell-off, but if you start looking at it in terms of a daily, it's not too bad. I mean, that's the trend up. Let's just get rid of all that. Say this is a trend up. It could be a pullback. It could be a pullback there, but that one big candle, it's going to make anyone nervous. I mean, so you've got people that maybe bought it here, have given up 50% of their gains. They're going to be thinking twice. What's the first thing on your mind when you wake up and see that? You go, oh, crap. I don't want to see all my gains washed away, with another pullback. So that's why, it's more of a sentiment driven, that candle there, more sentiment driven. If it was going to be a healthy pullback, it's not going to drop $100. That's my view. All right, so we'll see how that goes. Insulted. No, it's not, Tim. Oh, what I'll do, mate, send it through to the email, support@tradesetup.com.au, and I'll send you those. I'm just trying to stick to it nice and quick today. But put through those. Actually, Bobby, I'll put through a US yen chart as well, to you. Just remind me if you send through the email to the support at tradesetup.com.au, I will put that through to you. I'll just reply back to you. Unless anyone else wants to look at those now, extend the chat. But anyway, so that's gold. What was the one other thing? So Bitcoin, Bitcoin reversed. Look at that. It's come off these highs. We were looking for a long up there, and it wasn't. Look, to be honest, it wasn't the really big. I wasn't expecting a big bang, and I just thought, well, if it's going to go through that level, I want to be on board because it could easily power up another $400,000 or $500,000. Okay, on Bitcoin, the way it moves. I wasn't too confident that it wasn't going to pull back. I mean, you look at it and you go, well, look at the hourly chart, what I'm talking about. It was in here. You think, well, that's holding higher levels. That's all great. You've got these zones still holding. You're in here. You're starting to contract. If we break up and out of contraction, which we did, it just didn't get tagged. Its entry was around 975 thereabouts. It didn't quite get there, which is good because it sold off after that. Then I want to be a part of that because it could easily jam out through those highs. Instead, what it did, it turned around once gold started kicking in on the downside. The US dollar started moving. That big sell-off. So I think that changes the environment on Bitcoin for now and your cryptos. But we'll see whether that's just going to go into some consolidation mode. You might get anyone that's been buying through here and even buying here again. It's like gold; they're going to be feeling the pinch. Whether there's the best reason in the world to buy Bitcoin, it's irrelevant when you've got money and fear on the line. All right, so we'll see. Yeah, why is Japan buying all the US Treasury bonds? Is the most profitable forex trading contrast, though. Yeah. Oh, look, I'm not sure about that bond market, what they're doing there, to be honest. I can tell you what's happening on the chart, but that's about it. Well, they buy the US Treasury bonds, I'm thinking, just to weaken their currency or to support their currency. Sorry, I think they've been doing it for years. Actually, it's worth reading about. So that's about everything on the touch on at the moment, guys. So we'll call it quits there. We'll be back on tomorrow at 9:40 again, and then we'll see how this market goes today. So just be wary on the open if you're trading, your shares and things. Especially with the ASX. The ASX has been, popped up yesterday. It was looking great on the open and got sold into. So those sorts of swings are not conducive to a bull market. I know everyone likes to think, and it's sort of swings and roundabouts at the moment. The US is up strong, we're up, and then we get sold into. The US can be down, and we open low and then bounce back up. So it's kind of this massive range over a couple of days. Up one day, sell into the close, down the next day, buy up into the close, type of thing. So it is choppy, and I mean there's setups going on, but you got to sort of know where your levels are and just be careful. So we'll see if we get some negativity on the open. We'll just see what the SPY is, and yeah, we might be getting a bit of a pullback off that level, a bit of a wash, but we'll see. All right, guys, enjoy your day, and I'll speak to you again soon. And just don't forget those emails if you want. Send them through, and I'll take a look. Cheers, guys. Enjoy. I'll speak to you later. Bye.